All right, hello and welcome back to Stock Market Weekly, your 20-minute show catching you up on all of the notable moves across financial markets. I'm your host, Evan Medeiros, and we publish these shows every Friday, so make sure you are subscribed to the channel. Tune back in on the weekends to get your prep for the week ahead. Now, it was a short week out there, but it was an eventful week, and most of the eventfulness coming on Friday with the jobs report, and that jobs report coming out pretty hot. So on one hand, you know, it's a good thing that the economic picture looks strong and resilient. It doesn't seem like, you know, we're going to be going into any recession near term. There's no indicators there that suggest that. However, the downside is that the market is addicted to the rate cuts, and with a stronger economy, with potentially stickier inflation, the market is now kind of punting and prolonging its expectations of future rate cuts. We are now projecting, I think, one rate cut for the full year 2025. And of course, that soured the move on the market, or the mood on the market. On Friday, sell-off in stocks, continued rally up in treasury yields, and this trend is continuing. For the last couple of weeks, we've been talking about how kind of messy, bearish, glass half empty this market had been looking. And when you tend to get to these catalysts like this, or these potential market moving catalysts, they tend to resolve themselves more often than not in the direction of the prevailing price action. And that price action, again, has been on the downside. So we got the acceleration kind of in all of the trends that we were observing over the last couple of weeks. And we're going to take a look at that price action, of course, in just a little bit. We also had Jensen Huang over at NVIDIA, the CEO, giving their keynote CES speech this week, and simultaneously giving a very optimistic view of all the cool things that the world in AI and robotics and everything that we are currently going to be, embarking down in terms of productivity. But at the same time, he also sort of slashed billions of dollars of market cap out of the quantum computing space with just a brief comment saying that quantum seems to be 15 plus years away. So that was notable. We're going to look at some of those stocks. We got banks kicking off earnings season next week, so earnings are here. And we had another big week up for energy stocks. We're going to take a look at that in this week's video. Before we do, I do want to remind everyone that this show is sponsored by our friends over at Investors Business Daily. We've got links below here. Check out their products, Market Surge, and their IBD digital subscription using those links. Get you some discounts and get you some cool new tools as we progress through the new year. And now let's get into the charts. All right, let's get into it here. Warden TC2000, that is the platform we're using in this video. It's a platform we support here at the Trade Risk. Most of the layouts, the scans, the indicators, the things you see throughout this video, they're available on our website if you're a TC2000 user. We also have a TC2000 referral link in the description of this video. But check us out at thetraderisk.com. See if you've got some downloads that you're interested in for all you TC2000 users. Now, let's get into the numbers here. 1 week return, you can see firmly in the red across the board, 2 to 3% down on all of the major US averages. And if we take a look at volatility down here, everything was up about 2 or 3, 4 points. You can see the VIX going in just under 20 to go into the weekend here. That's one of the highest closing basis readings we've seen in some time. Now, if we look at sectors, not everything was a loser though this week. So we had some deeply negative index readings, but if we look at a sector level, we had energy continuing to outperform here, up 1% this week. Healthcare and materials also in the green this week. Everything else was in the red. Real estate was hit the hardest. Makes sense, as they tend to be the most, kind of sensitive to interest rates. Now, if we take a look at our sector trends here, this is our smart trend filter indicator. There's really no change to speak of. We have been in a downtrend for days to weeks on pretty much all of the sectors here, and nothing has changed. You can see trends basically are continuing. I shouldn't say nothing changed. One thing changed, that's energy. So if we look here at XLE Energy, you can see we actually got a flip up here and we got a bullish print on XLE. So this is clearly standing alone and looking different than any other sector we have here in terms of spider sectors, that is. If we take a look at market breadth and we take a look at our 52-week highs, 52-week lows ratio, well, we saw a nice spike up here in the number of stocks hitting 52-week lows on Friday. You can see basically hit new reading highs here for the past year or so. Again, these numbers, I wouldn't, they're not universal. Every charting platform, every sort of provider looks at these a little bit differently here, but we stay consistent with our readings here. And you can see it's, objectively just an increase, an uptick in the number of stocks hitting 52-week lows. This is one of the things we started talking about multiple weeks ago. It was one of the first clues that got us more on the glass half empty, kind of worried about what this market might look like. And this trend of negativity is continuing. Now, I wanted to actually extend our view here on market internals. So I put together this dashboard here, which I'm calling our index high-low washout readings. And so what this is showing us here, I've got the S&P in the left, the Nasdaq in the middle, and I got the Russell 2000 on the right-hand side. And these bottom readings here are looking at the percentage of stocks hitting 1-month highs or 1-month lows. You can basically disregard stocks hitting 1-month highs because that's not happening right now. But if we look at our 1-month lows across each of these indices here, you can see that, and I'm going to zoom out in each of these, you can see that we are getting up into, some washout reading states now. If I look at the S&P 500 here, that big candle down several weeks ago, we had 70% of stocks making 1-month lows. That's pretty significant. If I zoom out here, going back 5 years, 6 years, it's very rare. There's only a handful of days that have washouts of that high. And those can mark temporary bottoms. And we did get a bottom off that. We got a nice 4-day rally and then we gave it back and then we rallied and then we gave it back. Well, if we take a look here at, Friday's readings, we're back up at 40%. And really what this is just showing us is that there are now, there is some oversold, durable oversold short-term conditions in here. There's some opportunity now for dip buyers, for short-term traders. The volatility is here. And like we talked about in the prior episodes, when we get into this volatile state, when we get into pullbacks in the market, it is so important to understand your time frame as a trader. It's really going to matter because many of you watching this video might be long-term traders that are, position trading for multiple months or holding things for years. And then I've got, a handful of traders that are short-term. They're active. They're looking for opportunities. What's moving next week? And for those types of traders, there's opportunity here in this short-term, kind of washout levels. If I look at the Russell 2000, take a look at the percentage of stocks at 1-month lows. The other, that first initial leg down was over 60%, and now we're almost right back to it around 60%. If I zoom out here and I just look collectively at prior lows and where this reading gets, you can see that, again, we're fairly washed out here. Fear is in the air. It's not early to the pullback now. And for the Russell 2000, not the mega cap heavyweights, but the average kind of, smaller mid-sized company, there's some, decent opportunity there of oversold stocks. Can this get more oversold? Absolutely. Does this, look at long-term durable bottoms? No, it doesn't. This is a shorter term sort of washout reading, 1-month lows. So I thought that was useful information. There's definitely some stretched behavior here, and I wanted to at least present it in that slide. If we take a look here at our treasury yields, you can see 10-year in the bottom right just continuing to extend higher here. I think we're at 4.78% now for the 10-year treasury yield. The dollar index continues higher, and basically acceleration in the wrong direction if you're an equity market bull. If we take a look at commodities here, it was good though for commodities this week. Copper, oil, silver, gold, all up. Bitcoin was down, but generally speaking here, energy and commodities were faring pretty strongly. All right, let's get into our price action here. Let's take a look at what's going on. Let's look at the weekly chart here for the SPY. You can see that on a weekly basis. Let's switch over to the cash settled market. You can see that on a weekly basis here, we did open the week higher and we tried to probe up. And that ultimately failed. We rejected and we closed towards the lows of the week, printing a very, convincing sort of solid bearish engulfing bar on the last 2 weeks of price action. And so when we look here at the weekly chart now, you can see that this downtrend, this pullback is extending now for basically the 5th week in a row. If we go down to the daily chart here, you can see that this very sort of choppy price action, right? This kind of topping pattern that we've been talking about now for several weeks. This isn't a new downtrend. This is something I think for folks watching anyway should be fairly prepared or understood kind of the weight of the evidence that we've been talking about over the last couple of weeks. That continues to be heavy in this market. We did get an uptick in volume on Friday. We did get into this gap here back from the election, and we did get a small signs of life off of the lows, but nothing that's too convincing. So when I look at the price action here, like we've been talking about for the past few weeks, a 7 to 10% correction feels like it could be in the cards. What I see at this stage of the correction, I think Monday we have kind of two paths at this. We're going to see this market take. It's either going to be the capitulation path where Sunday night futures are going to open down, or we're going to have just a bad Monday open where things really start to capitulate here in the short term. Maybe we get a 2%, down session here in the S&P 500 and really sort of wash things out. And maybe that marks a durable low here for this correction, right? That's like one scenario. I think the other path is we get a bounce. We get more oscillation here. We're going to get more of a grind up, then down, and slightly lower lows and lower highs, but it's just making it difficult to really catch on any durable momentum, right? It's one of those two paths here. We've sort of talked about that from the beginning, but with some of those washout readings we looked at, there is some evidence here that says, another 2-3 day bounce back up to 5,500, put in another lower high, and then roll back over as we increasingly deepen and extend this corrective state in the stock market. So those are the kind of two paths I'm thinking about right now. I think that, we are getting mid-cycle here in this corrective state. It's not early anymore, perhaps. I think this correction could, definitely continue, but it's just getting a little more difficult. It was easier to kind of call the topping pattern a couple of weeks ago that some weakness was going to be here. Now that we have the 10-year Treasury yield up at 4.8, everyone seems to be worried about it. It's on people's radar now. The Fed's not going to cut, right? The interest rates are staying high. VIX is at 20. Cat's out of the bag. There's already some worry out here. And so now to stay one step ahead, we just kind of think about those next steps. So I'd be on alert again tactically for those bounce plays if you're a short-term trader. If you are longer term, then maybe you're still just ignoring everything that's happened here because it's not that significant, at least from this index level. If we take a look at the Nasdaq 100, we saw basically us continue to sell off this week, heavier volume come in. We're coming right back and testing these July highs. We talked about that last week. This would be a fantastic spot to see this market hold. Ultimately, again, if we came in on Monday, gap down, and then saw buyers arrive under this 503, 504 area, that would be wonderful. That'd be a good, kind of bottoming formation. Kick into earnings season. Let's see how companies are faring in this environment and what they're guiding into next quarter. That would be a very reasonable spot as well. We're still getting a very steady pattern of lower lows and lower highs right now in the QQQ. If we take a look here at the Russell 2000, we did break down here on Friday as well, increase in volume. Again, this is the worst looking of the major indices. It's also the most oversold and washed out, right? So again, it's this double-edged sword of there's opportunity here in the volatility of the Russell 2000. There are sectors and individual stocks that are clearly ready to bounce or have been really beaten up and left for dead. But it's also, again, just the worst looking right now, and it's taking the brunt of the selling. So there is opportunity here. Again, we've broke below these lows. What happens next week if we did get some signs of life? We had a gap down towards Friday's lows to open up the day, and then we punch right through and we recoup this consolidation and then start to springboard higher, right? Some type of false breakdown or some type of at least short-term bounce feels like it could be a path here for the Russell 2000 as well. So keep that in mind. Longer term, look, it's violated support. You know, you sort of know my feeling. I want to see us back over 225 on a weekly closing basis. If we can get to that, then we have some hope here at a more durable uptrend. But until and if that happens, you got to be a little bit cautious here. So bit of a stock picker's market. Volatility is here. Correction's not new. The narrative is out there. People are worried. And so there's opportunity for traders. So let's move it along here because I got a lot of other charts I want to look at. Let's take a quick look at gold. A beautiful rally here on Gold Friday. Big volume coming in. Look at this weekly chart. It's been sleepy. It's been consolidating. It's been really just no place that's been too interesting, but it's starting to come alive now. Gold, like it, have a position in it. It's working. Oil continues to work here. It's a follow-through week. We talked about oil, the USO breakout to start off the year. Well, we're getting more follow through, more volume. Nice to see. A little bit stretched in the short term, but it's working. Natural gas also really roaring back. It gave a lot of that forward movement last week back. Now this week, it's coming right back and hitting hard here. Big volume weeks. Natural gas has been a very tough place to be over the past months, years, decades. I mean, forever basically, but it goes through periods of this mean reversion or this squeeze, and it can really move, and it moves fast. So natural gas coming to life here. Let's move over to these quantum computing stocks. IONQ, we don't usually spend too much time on the smaller stuff like this, but this is definitely thematic. It's in the zeitgeist right now of what's working in the market. So IONQ, probably I believe the largest market cap. It's had a remarkable move up here over the last 3 months, basically trading from $8 a share to $50 a share. Again, that one comment from Jensen Huang at CES basically brought this stock down, 40% or so. Look at the big volume that came in. Buyers did step in right now, so I think it's interesting as a trader, as an opportunity to see if the dust can settle here and if buyers can continue to support those recent lows. RGTI is another one here that, again, got 45% session lower here on multi-billion-dollar companies, right? Basically, an entire industry gets cut in half overnight. Is pretty remarkable. QBTS, I believe, is another one here, down 37% or so, 38%, the day after. So some interesting opportunities there for you tactical traders looking at that space. High risk, high reward type of plays. If we take a quick look at the Mag 7 to round out our video here, you can see that this Apple continues to fall apart here. We flagged this pretty early on this trend breakdown here and just talked about how ugly Apple looked, talked about the old highs in July to make sure the dip buyers step back in, and look where they are. I mean, they are stepping in. They're trying to step in here in Apple. The stock now basically corrected 10%, and we're seeing a little bit of dip buyers come in on that 10% correction. Also, Nvidia quickly lost its kind of breakout level back below 140, which is essentially the highs from June as well. Really just looks like it's going sideways here, so not too much else to say. I would say out of all of these now, Meta, Google, Tesla looks pretty exceptional right now too. If we take a look at this one, Again, short term didn't break to new lows this week. If I go down to dare I go down to an intraday chart here, 65-minute chart. Look at the higher low that's trying to get put in here. Actually, I don't have a position in Tesla, so I don't own this, but it does, notably starting to show a little bit of relative strength there. And same with Meta, same with Google, looking pretty decent for the Mag 7. So I think that's everything I had. There was lots going on, but trying to fit it into a 20-minute show, I think that is the most important things to have on your radar. Keep an eye on interest rates, right? Keep an eye on the VIX. Keep an eye on the lows from this week into Monday. If we do get some of that capitulation on Monday, if we do get some type of panic, maybe that's the low. Maybe we have enough anxiety in the market to at least give us a durable bounce through the inauguration, through the month end. We'll see if we can get it. But for now, we'll take things day by day. Thanks as always for tuning in every single Friday. Make sure you are subscribed to the show. We've got lots of links in the description of this video. And thanks again to our sponsor, Investors Business Daily. Have a great weekend. We'll see you back here next episode.